After being involved in running money at both Allan Gray and then Investec, fund manager Sam Houlie decided to take a sabbatical after more than a decade in the business. But he's since returned to the industry, this time in a new role, as we said, the head of the Unconstrained Boutique at Momentum Asset Management. And tonight he joins us for the full show to tell us his plans. Warren, you're going to kick off our show this evening.
That's right, Bronwyn. We just wanted to give a little intro into Sam and the contrarian style of investing. And after speaking to Sam last year, we came up with a picture, and I don't know if we can make it out very clearly here, Sam, but rummaging around the dustbins, I think, is the way you described your investment approach.
Is that you, Sam?
No, it's not me.
that is not Sam, but it's indicative of the way he approaches investing, and we're going to get a little bit more about that. But if we just turn over to the next slide, this is a great quote I found from Bloomberg. When we talk about contrarian investing, we talk about doing things in almost the opposite direction to the crowd, not for the sake of being opposite to the crowd, but because sometimes the crowd acts irrationally. And this is just a stat we took, a quote that I took from Bloomberg, where we took, the worst ratings, according to Bloomberg, at the end of 2011 turned out to be some of the best stock picks in 2012. So that's what's going to kick off the show tonight. We're going to talk about contrarian investing and Sam's plans. And over to you, Bronwyn.
Can I go back a step on the sabbatical?
Sure.
How much time did you take off, and why? Did you need a break? Do investment investment professionals need to take a break every now and again?
I think it's useful to take a break, very useful, mainly just to recharge your batteries. It was mostly for personal reasons relating to my mom's an illness, but it was a good thing, and I found that coming back, I was very refreshed. It feels like a long time ago now that was the case, because really since 1st of July last year, I've already been back. And in that time, really, I've built a team. I've made sure that we do things the way I've always done them in the past. And the team is now fully constituted.
Can I ask you a little bit more, sorry Warren, to hog the spotlight here.
No problem.
In terms of building the team, where do you look for those skills? Have you been aggressive enough to poach?
Yes. I think when it comes to teams, I think the first and most important thing with teams is that really you need to understand the attributes of the people in your team. So half of the team are people that I've worked with before. So finding them was not very difficult because they've worked with me before very successfully. They've ended up at other institutions before they joined me. And then there are others that are new to me, but there's perfect alignment in the way we look at the world. And really, I think that the team itself can do things the way I believe, our philosophy, really. We're all doing the same thing. We're not the same thinkers. We don't think about things exactly the same way. But certainly the team's aligned and we're all rowing in the same direction, if you think of it in that way.
Just in terms of the team, Sam, do you want to just update us on who you've got and obviously the portfolios that you're going to be running in this unconstrained equities or the unconstrained division of
It means
Momentum?
no holes barred when it comes to your investment strategy, doesn't it, Sam?
Yes. Well, when it comes to, we call the unconstrained strategies at Momentum Investments, and I think the key thing there is that we start with a blank sheet of paper, and we try to do what we consider to be the sensible thing, the reasonable thing, and that's our underlying approach. So the team really, there are three of us that are portfolio managers with deep experience, with over 15 years average experience in South African markets and global markets. Those three people are myself, Sean Stockard, who came to us from Stanlib, where he was head of the Stanlib Value franchise.
Okay.
And also ran Sharia funds and the Stanlib Small and Mid Cap Fund. Of course, I have history with him in that he worked with me previously, and we worked together very successfully. We have another portfolio manager, Roger Walters. And then the rest of the team are very experienced analysts, ranging in experience from double-digit in years to 5 or 6 years experience. So really, they all have the one very important thing in common. They're absolute value investors. They're independent thinkers within contrarian streak. And they have experience in local and global markets. So in total, there are 10 people in the team, 8 of which are investment professionals and 2 support staff that over time we believe could in fact actually join the investment team.
Now you opted to go with an established asset manager in Momentum as opposed to starting your own business. Sure. Just for my curiosity, what were some of the key points that swung you the way of going with an established investment house as opposed to perhaps starting your own brand and your own shop?
Sure. The best way to describe it in one word is corporate entrepreneurship. Literally, the MMI group, which we all know, listed on our stock exchange, the board there have really been incredibly courageous. I think Nicholas and Wilhelm really have to get the credit for being incredibly courageous to say that we are willing to, within a corporate, allow a business effectively to run like a new entrepreneurial venture. And that's what we have done. And of course, everything's based in Sandton and Pretoria, and we're based in Cape Town, which is my preferred destination. But really, that's the combination. So we have all of the infrastructure. We just literally plugged in. And on day one, we were able to manage money. And the team that I've constituted, the team's able to focus on investments. You know, really our unit holders, the people who place their faith in us as fiduciaries, what they want us to be is focused on the investment decision and not really caught up in the other things that happen in corporate.
Sam, another trend that we've seen among investment professionals is that when you are running a mini business within a larger business, is that the investment professionals themselves have their money invested in that space. Is that the reality with your team?
Yes, that is it with our team. Our team is completely focused on the funds we manage, but the team's also completely invested in it. Now, we wouldn't say we're the majority of the investors, but we have a huge amount of our own net worth invested in the funds that we manage. I think that's a crucial point. And you know, in investing, you say you eat your own cooking, which I think is quite an important thing.
Just turning our attention to this sort of competitive landscape, Sam. It appears to me that the South African market's a little bit overtraded with the amount of investment companies. You know, I just wanted to see what you thought about that, and also just take us through the specific funds that you take responsibility for within your segment.
Let me first of all say that relative to the time I started in this industry, which is as an analyst at Allan Gray Investment Council, as it was called then.
Yes.
There have certainly been more value investors and contrarian investors that have arrived on the scene. You know, back then there weren't that many.
Right.
And really, just purely in terms of competitive edge, the key point is that if everybody's doing the same thing, it's very difficult to compete. So you need other areas that you have to bring to the party. You have to have an edge that's slightly different. So the landscape has changed in that certainly in South Africa, more investors are talking value investing, contrarian investing. That's the negative. The positive is that not many people act in that way.
Okay.
So we have found that saying it rolls off the tongue very easily, you know, because I don't think that any investor
Can I add a little bit to, because we now got intrinsic value investing, as in Hlelo Gihose last night, deep value investing. So we've got proliferations of the terminology as well.
Yes, you have. So I would say that many people sound exactly the same. In truth, their portfolios are completely different.
Right.
So I would say that the landscape in South Africa has changed in that I think you have big investment managers managing huge pools of assets that by default cannot deviate meaningfully from market benchmarks.
Okay.
Even if they consider it to be a good idea, it doesn't really generate the outperformance. What you then have, you have smaller investment managers with the genuine ability to add value over and above the market benchmark, but they're managing smaller pools of assets where deviating really does add value over time. And I would argue that it's not just worth saying it, but you really have to do it. So the trick really is the philosophy is important, but really you have to look at the portfolio. And I often find this is quite interesting in that when you're talking about ideas, you know, you can say you're cautious, but your portfolios can be positioned very aggressively.
Right.
Whereas for us, you know, we feel that you have to really put your money where your mouth is in the way the portfolio is managed. So I think the biggest difference in South Africa over the last 15 years is that everyone sounds the same, but thankfully not everyone does the same thing. And we're really operating in a niche where we like to believe that what we say is exactly what we do, even if it doesn't necessarily work in the short term.
Okay.
So can we talk about that rubbish bin that we saw somebody else scrounging?
Rummaging in the rubbish.
Rummaging in the rubbish bin. What are you looking for? Because again, you know, the typical philosophy that a value investor will put forward is that you go for the unloved stocks, that you're brave enough to go against the trend. Is that the reality when it comes to your investing style?
That is the reality for us, but it comes, as always, with some sort of health warning. I think rummaging in rubbish bins does come with a health warning. Sorry, pardon the pun. But what is quite important is that you have to step back and think, what is the ultimate competitive edge for an investment manager? Investment management is very competitive and everybody's really smart.
Yeah.
So the first way in which you can give yourself an opportunity or a chance is to go where people are selling indiscriminately. And the rubbish bin is just an analogy for stocks that are being sold for reasons other than fundamentals. So you get to the point where investors say, I hate this stock, I hate this idea, I hate this sector, and all I want is I want it out of my portfolio. And we have found that that behavioral element can be exploited if there is a valuation underpin. So when we talk of the rubbish bin, we're literally saying everything that people hate is in our universe of potential ideas. But not everything in the rubbish bin is worth investing in. So we will cherry pick based on valuation. And there we could be called anything to value investors, intrinsic value investors. We're not really we're less concerned about what we called and more about the fact that we're trying to buy a rand for 50 cents or 60 cents. And we think that this is a very difficult thing to do.
So what tests do you put in place to choose the stocks that are trading below their intrinsic value, for instance, because of unloved reasons, emotive reasons, rather than fundamental realities?
Well, there are a variety of different valuation metrics. And even there, the competition stuff, anyone with a computer can do a valuation. And certainly if someone has a finance degree. So it's a little bit more than just the numbers. There are qualitative elements. I think there's a benefit to being in the industry for a long time. I've learned things that I think are important, and thankfully things that I think you can avoid. So over time, we have a methodology that we spend time on finding undervalued situations, and then we think there's something more. You have to really have a genuine, well-researched thesis for going against what the market thinks or believes.
Right.
And there is, that's probably part of our IP. So Bronwyn,
Can I throw something at you? This may put it. Let's see if we can do a little case study here. Telkom. For love or money, I cannot get anybody on this show or any other show that I host to say that they like Telkom, be they deep value, intrinsic, whatever it may be. Can you buck the trend there?
Yes, absolutely. So let's talk about that stock. So once again, this is a classic example of what I say is what I do. Telkom is in our fund. Telkom is in the value fund, which I'm the portfolio manager of, the Momentum Value Fund. It is not it's not our biggest position. Sorry, I'm never really sure who.
No, it's fine. You can look at us both. The camera catches you looking at the audience either way, so don't you worry about that.
So Telkom is definitely in our fund, but it's not a meaningless position, but it's not our biggest position, and there's a reason for that. Do I like Telkom's business model? Well, I would say it is structurally disadvantaged. There are some real issues that the business has to face. And I think that clearly there are issues that I feel the business has to face on the shareholding structure. But I like the way the stock is priced. And really, my view on the business is completely independent of my view on the stock. And we like the stock, we think it's undervalued. And in the context of the South African market, or just markets in general, the stock is relatively undervalued. And for that reason, we're happy to own it. And we think that the future could turn out to be a little bit differently. So yes, I love the stock.